We're trading the markets now in some detail around the Brexit vote last night, where Theresa May and the Conservative government lost that meaningful vote by some wide margin, in fact the biggest ever margin, I believe, in the history of the British Parliament. And we are trading as well ahead of a no confidence vote which has been tabled by the Labour opposition party, Jeremy Corbyn, doing that immediately last night, and that's at 7 p.m. this evening. Now, Brian Noble joins us now from tradernoble.com. Brian, it's been an interesting period, and in fact when we last spoke you were saying then you felt that we were on a path to a second referendum. We've now got what has come to pass with this dreadful result last night for Theresa May. How are we best trading this?
Well, it's interesting. Sterling fell against the dollar, two big figures ahead of the vote, and then as soon as the vote came in, record number and all as it was, cable reversed the whole loss, and we're back up trading, testing 129, which is the 100-day moving average. We're currently trading at 128.50 now. I think it's only a matter of time before we break higher. I think all the bad news is priced in here. Europe certainly doesn't want the UK to, in my own view, deep down to leave, because who's going to pay the 90 billion that they contribute? Has to go across all the other economies. So I think it's inevitable over time that we're going to have, it's going to be kicked down the road, and eventually there will be another referendum. So
your best case is, in fact, despite the fact the Europeans have said they're not going to renegotiate Theresa May's deal, you think at the edges they will start to nibble away at it?
Yes.
Okay.
I mean, I think everything has been postponed. No matter what agreements go on, and any trade wars, or you saw it with the States and China, suddenly it's another 90-day extension. Yeah. I think the same here. The withdrawal agreement will be extended, and then there'll be more naffing around the sides, and then we'll come with eventually there will be a referendum. And I think Theresa May is right. Corbyn has no Brexit policy. We haven't heard. He hasn't put up an alternative.
Yeah. Okay. Let's get back to this chart on sterling dollar, because, as you say, a lot of activity last night, and that can be seen in this wide, long-legged doji here that we had yesterday, all the way down to 126.60 at one point last night, and recovering to end the day pretty much where we started out. A little bit of money's taken off the table, 128.50 at the moment, as you said. Where would you trade this up to? You're long this.
I'm long. I've been long pretty much since we were here with you 3 weeks ago, kind of around the 128 area. We haven't done a lot. It's been, as you've seen, it's been mainly sideways trading. I know we got down to 125 on the flash crash just after the beginning of the new year. We're back up. I think the price action is telling you it's a bit like the US stock market. The economic numbers have been awful, and yet the stock market has gone up. So when you see a market rising on bad news, you got to respect it. And I think it's similar here with sterling. I think inevitably we will take out this 129 area. This 128.50, 129 is strong resistance. Eventually it will be broken, and I think we'd head back to 133, 134. Yeah,
that takes us up past this 200-day moving average as well. You mentioned the US stock market. I want to get onto that in just a minute, but I want to stay with the foreign exchange markets if we could, because yesterday Mario Draghi was talking about the fact that the economic data in Europe suggesting that we do in fact need more stimulus given to these Eurozone economies. We've seen the European Central Bank cancel its QE program as of the beginning of the year. In terms of the trade around euro dollar, what's your positioning at the moment? Because in the last week or so it's been quite weak for the euro traded against that what is a stronger dollar.
Yeah, I think the minutes that came out last Thursday from the December meeting weren't really reported in the press. I mean, I spent half an hour going through them on Monday. I mean, if you go through the minutes in detail, they're really worried about the Eurozone economy. All the economic numbers coming out over the last 6 months have been incredibly weak. You've got the German bond yields, or sorry, the Italian bond yields widening out. You've got the yellow protests in France. I mean, there's trouble everywhere in Europe, and the numbers are reflecting that. I think there's absolutely no chance of the Eurozone hiking rates. There's a fair chance that we're going to end up in a deflationary environment like Japan, and it doesn't augur well. And what you call Draghi was supposed to just talk about he wasn't really supposed to talk about the economy yesterday in Strasbourg, and he just mentioned, is it a sag? He doesn't believe it's a sag. It's just it's a slight downturn that has extended longer than they expected. I mean, this is, I think that we've seen the numbers. It's just been very, very weak, and obviously the euro has been reflected of that. For the euro to really get back, nobody wants a strong currency. That's the problem. So the US would prefer a weaker dollar, but for the dollar to get weaker, the euro needs to break 115.60. On the downside, this 112.15 that's held on 3 occasions is very strong support. Initial support is around the 113 area. So the euro's really been stuck in a wide range between 112 and 116 for the better part of the last 6 months, and it's going to take a break at one of those areas to get the next move. But it could be a drastic move because we've had such a consolidation for such a length of time. I'm sceptical of the price action because I still think Trump wants a weaker dollar. So I'd be looking to buy in front of 113 is my buy level, and I'd be a seller in front of 116.
Okay, all right, excellent. Thanks for that. Let's get back to these US stock markets. Government shutdown. Got trade worries between the US and China, but one look at the charts, certainly the last couple of weeks, and you think to yourself, what's going on? Have we got the government back in operation? Has the trade deal been agreed? I mean, we've seen this market move higher and higher still. When you were last in, you were talking there about a long trade. It's worked out neatly. Yeah,
it's been incredible. I was in here the Thursday before Christmas. S&P was probably trading around 24.90 at the stage. Had an incredible 160-point fall between the Thursday and Christmas Eve on Monday. One thing that I follow is internally in the market is called the McClellan oscillator. On the Friday before Christmas, it closed below -300, one of the highest negative readings ever. On the Monday, in the last 20 minutes of trading, the S&P fell 30 points. Dow fell nearly 400 points. McClellan oscillator closed at -327. On Boxing Day, when we opened, market traded sideways to lower for 3 or 4 hours, and then we had this biggest points move ever in the Dow, and the Dow moved up 1,100 points. I've no doubt the central banks come in and supported the market. We see that the Swiss National Bank are the biggest shareholder in Facebook. So to say the central banks are not in here, I think that the economic numbers have been awful, and yet the stock market has rallied. Now the McClellan oscillator has whipped around the other way, and suddenly we're up at plus 252 last night. So from grossly oversold, we're severely overbought. The 50-day moving average is around the 2630 area. So that's held the whole downtrend since we broke down in December, the beginning of December. So I think here I would be a seller into the 2630 area with a 20 handle or 20-point stop. If we do take out 2630 to 50, then we're going to run up to 2700, and everyone is rosy in the garden again.
Yeah. Okay. Before we let you go, just one last update on gold, because we always talk about this, in fact gold and silver, when you're in. What's your trade on gold at the moment? Because we've seen it approach this magical 1300 level and fail.
Yeah, it's amazing. The 4th December in a row, gold has rallied strongly into late December, into early January. It suddenly hit a roadblock at 1300. As you can see on your chart there, we've a downtrend line coming in from the high of 1900 from 2011 at 1300 as well. If we can break 1300, then we're off to the races again. On a risk reward basis, you're probably better off going short gold, but I think given the drastic economic news out and all the trade warfare and the Brexit and all the political upheaval going on, it's a brave man who would sell gold. I prefer to be flat. If we break 1300, go with it. You can have a $10 stop, a very tight stop, but gold could easily run to 1330, 1340 very quickly.
Okay, all right, Brian, thanks indeed for dropping by. It's a pleasure to talk to you. Amid all this Brexit chaos, there are other stories out there, as Brian was saying, with his indications on how he's positioned in the markets around some of the popular trades. If you want to catch up with more with Brian, you can catch him on his website, tradeenable.com.